We're going to talk today about a special new thing that's come up in the last few years in the international field of taxation. Up until not too long ago, the United States really was not all that sophisticated in the world, in the fact that we were in an international world and there was a lot going on outside the United States that included Americans. Well, the United States woke up when someone turned in a whistleblower action and revealed that hundreds of thousands of Americans had foreign bank accounts that they were never reporting to the United States. And all of a sudden, the United States woke up because that's a lot of tax dollars that were going out the window, a lot of fraud that was being committed, and they immediately went into action, the Internal Revenue Service did. And they knew that people all over the world now would be scared, and the ones who had foreign bank deposits that they hadn't reported. Well, the IRS wanted money, not people in jail. And they put through two programs that would allow people who had foreign bank deposits to now come clean. And it depended upon whether you were kind of a really bad guy and you knew full well what you were doing, you intentionally did it, or whether you really were just a little bit clueless, didn't have a lot of big money in the foreign bank deposits, and because the laws are complicated, just never knew what you were supposed to do with your foreign bank deposits. So in order to get the money, instead of the people in jail, they put through first what they called the Offshore Voluntary Disclosure Program. Under this program, people were, and this program was instituted in 2009, people were permitted to come clean, to go to the IRS and say, look, I have an offshore bank deposit, I've got income on it, and I never reported it, now I want to report it. And the IRS said, fine, we will allow you to report it, but we're going to charge you some substantial penalties. And but the penalties will be much less than what we really could charge you. So the first program they put in was the Offshore Voluntary Disclosure Program. Under that program, in order for you to be clean and not have major other penalties that could wipe you out, you had to meet a few standards. Number one, file 8 years of prior income tax returns and amend those returns to include in those returns all of the income that you earned that you never reported on your foreign sources. Number two, on all of those taxes, they were going to charge you a 20% penalty in addition to the taxes. Number three, they would charge you interest every year over the 8-year period. And number four, the biggest penalty of all, they were going to charge you 27.5% of the highest balance that you had in a foreign bank account during the 8-year period that you had reported during that failure to report period. Now, it was only one time, but 27.5% on your highest balance can be problematic. You might have a high balance during that 8 years of $4 million. You might have lost $2 million and only had $2 million left. When they charge you 27.5% on that kind of money, they could break you with that, with the income taxes and the penalty. So that's the first program That was a very, very expensive program.